Welcome to Accounting Made Simple, where numbers make sense and confidence begins. I'm Mr. Samson, and today we're diving back into our accounting topics. Whether you're in grade 10, 11, or 12, you are in the right place. Let's break it down step by step for you. Good day and welcome. This is another day, and we're looking at a different question. We are having the DBE National Paper, May June 2022, question 1, 45 marks for 35 minutes. Key topics, this is the statement of financial position and the notes. Complete each of the following statements by choosing a word or words from the list below. Write only the word or words next to the question number from 1.11 up to 1.13 in the answer book. The dash are employed by the company to set up and monitor control processes or the internal control processes. So these are individuals who are employed and they work with internal control processes. Definitely our correct answer is internal auditors. Then going to number 2, these are appointed to give an unbiased opinion on the financial statements. The people responsible for expressing an opinion are called external auditors. All right, going to number 3, the data are appointed by the owners of the company to perform key management functions. Well, this one will be directors. They are responsible for running the company. They are responsible for the management of the company. 1.2, Prudence Limited. This information relates to the financial year ended 20th February 2022. Complete the following notes to the statement of financial position. 1, ordinary share capital. 2, retained income. So before you work your way out, you quickly need to have a scan on your answer book. Okay. Just a quick recap. Number 1, the correct answer is internal auditor. Number 2, external auditor. Number 3, directors. All right, we are preparing the ordinary share capital note and the retained income. All right, looking at my answer book, I already have an entry here at the end of the year. So the first line entry is normally balanced at the beginning. Always start there. Let us check what do we have on additional information, because there's always a dedicated section for share capital and dividends in each and every paper. 1 March 2021, which is the first day of our financial year, 75% of the authorized share capital of 1.2 ordinary shares were in issue. So if you say 75% by 1.2, you'll get 900,000. So at the beginning of the year, we had 900,000 in shares. We should record that in our answer book. At what price? Well, we cannot make that conclusion for now because we don't have the owner share capital balance at the beginning of the year. The second line item on our events, it is the buyback of 80,000 shares. 80,000 shares were repurchased from the retired shareholder. He was paid 20%, which is 136,000 above the average share price, and would no longer qualify for dividends. So you need to put up the buyback, and the number of shares repurchased is 80,000. Now you must calculate the average share price for this buyback. You need a logic table. So the given percentages, the portion above the average share price. So you have the average share price, the portion above, and the total, if we put the logic table. So our average is at 100%. The portion above, 20. Total, 120. Remember, this portion above is what we call loss on buyback. So you may write this logic table in your own words, depending on how you understand the relationship between variables. The 136,000 represent the portion above the buyback. But now once you have this setup, it means you are going to use our table, what we want over what we have, times the amount. So we are looking for the average price is 100 over 20 cross multiplied by 136,000. If you do this, your final amount is going to be 680,000 Rand. And that is the amount that you should place here as the figure for buyback. Now take 680,000 divided by 80,000 shares. Our average share price is 8 Rand point 50. Since there is no new issue recorded from your BD to the new line item of buyback, it also means that at this point, your average share price is 8 Rand 50. Remember, the average share price will only change when you introduce the new issue. So if there are no transactions relating to additional shares, then our average share price remains the same. So in this case, from BD to buyback, we still have the same average share price because there is no introduction of new new shares or new issue. 900,000 times 8 Rand 50, that will give you 7,650,000. Now we are left with the last entry. The last entry, we know that an additional 150,000 shares were issued and no price is given. So new issue is now following just after the buyback, 150,000. Now you put this together, you'll get your balance at the end, 970,000. And you put this together, you realize that you have a balancing figure. You take this amount, subtract these two, and that will give you 984,000. Here you can write balance at the end, and we have 7 marks. Now, looking at this one, there are certain items which are not there. Buyback is already there. So this is net profit after tax, and this is interim dividends. Now I have to look at the format. This amount must be in brackets. I know that this is A, B, C, and D. And for this to give me the final amount, I must say A plus B minus C minus D. All right, I have the format sorted. Time for additional information. All right, so I have here interim dividends. It is 28 cents per share. So if you look at these interim dividends, the timeline says by then only balance at the beginning plus the new issue. Balance at the beginning minus the buyback will give us the number of shares available in the share register. So you're going to take 900,000 shares, remove the buyback, and that will be 80,000 shares. Your remaining amount is 820,000 shares multiplied by 0.28. And this will give me 229,600. The total of this will give us D, which is 443,000. So we have 2 marks there. Item B sorted to help us a lot to get some items there. Then income tax for the year, after taking into account all adjustments, amounted to this. And 30%, and this is 30% of the net profit. So again, you need the logic table if you handle net profit figures. Before tax, we are at 100. Our tax rate, 30%. Therefore, after is 60%. The amount given, 438,000, represent income tax dash what we want over what we have times the amount. We want to get net profit after, the 100 minus 30 is not 60, it is 70. We want to get net profit after tax, so that will be our 70 there, over what we have, 30, cross multiplied by 438,000. This is how you calculate net profit after tax. So you put 70,000 over 70 over 30 times 438,000. And this will give us 1,022,000. Alright, I'm left with A and B. A and C, shares repurchased. If we go back to our question on item B, there's information relating to the buyback. He was paid 20% above the average share price. This above represents loss on buyback. Therefore, loss on buyback is cut and paste. 136,000. Since I have everything except A, I can start from this amount. I'll take this one, add here, change the sign, add here, subtract here. And that will leave us with 753,000. So you start from the bottom and work your way backwards. All right, retained income sorted. So from here, you are now handling the balance sheet. On the balance sheet part, you start by filling up information. So your nominal account section is smaller, but the balance sheet section, you have a lot. Fixed deposit, let us take this one. It is a non-current asset for 89,000. All right, so that one extracted. Ordinary share capital, the entry is already there. Retained income, the entries is already there. If you look at your answer book, there you go. Those entries were extracted by the examiner. Loan is a balancing figure and loan should be on non-current liabilities. So I'll place my loan there and indicate that this one is a balancing figure. There is no information in the trial balance. SARS provisional checks payments. These are payments. So the outcome, I don't know if it is going to be an asset or liability. So I'll write some on top of my answer book. SARS income tax. And I'll start by subtracting before I look for the amount that we should have paid. So minus 450,000. I'll leave this one here like this and I'll carry on with the adjustment. There's definitely a place where I'm going to get the income tax. The moment I get the income tax for the year, then I'll come and place it right here and I'll compare. Right, creditors control, that is for payables. So we're going to record on payables or trade and other payables. So here you have 617,450 taken. Shareholders for dividends, that one is a liability. Again, it's a walkaway entry. We call it shareholders for dividends. And the amount given then, it is 213,400. But we are certain we are dealing with a liability. Debtors control, it is on receivable. 875,000. Provision for bad debts, balancing figure. So somewhere this one is related to debtors control. We'll look into that. Trading stock, balancing figure as well. Petty cash, 5,000. That is for cash and cash equivalents. Cash and cash equivalents, our first entry is 5,000. Bank overdraft, it's a balancing figure. All right, we have extracted figures from the trial balance. Now we need to understand those two items that we have on our nominal account section. We'll check using the additional information. So item B, we have ordinary share capital account. That account is already updated and extracted. We also have a part of our retained income and the extraction done already. Apart from these two, we normally also have shareholders for dividends. And again, shareholders for dividends sorted. So item B, one will tick it off. Say we have used item B for our adjustments and we are satisfied. Item C is our next stop. Income tax for the year, after taking into account all adjustments, amounted to 438,000. So now I know what to do with my figure that is hanging somewhere on the answer book. They are saying income tax 438. So we are going to put 438,000 to this. It means SARS is owing us. And if you calculate the two, the balance is 12,000. So SARS is going to refund 12,000, and that money must go back to the business. So if SARS is an asset, we are going to use trade and other receivables. We add 12,000. All right, item B sorted, item C sorted. Item D, provision for bad debt must be increased by 2610. But how much is my current provision? My current provision for bad debts, it is 23,640. Add these two, I'll end up with 26,250. And this amount must be subtracted from the debtors control. So we're going to subtract our amount that we've just added, that would be 26 minus 26,250. Put it there, put minus here. Okay, so that one sorted. Only half of the audit fees were paid. So the balance will be paid in March. So these are expenses and they are outstanding. You create a current liability and it says half. So on current liabilities, you are here, you want to increase with the half of audit fees. Audit fees figures, they are somewhere here. So 48,000 is a half, meaning the other part is 48,000. So we are going to add 48,000, which is a half. The tenant occupies part of the premises from 1 May. He has not paid the rent for January and February. So it's May, June, July, August, September, October, November, December. Then he fails to deal with 2 months. 1, 2, 3, 4, 5, 6, 7, 8. So we have rent for 8 months. So 102, 400 divided by 8. 102, 400 divided by 8. That is 12,800. The challenge, you are accommodating, or you must record the rent outstanding for 2 months, January and February. So 12.8 times 2, 25,600. It is an asset. So you are going to take 25,600 to current liabilities. So we are going to add here 25,600. So all these items sorted, we are now on 240,000 of the fixed deposit will mature in April 2022. This is short-term fixed deposit. You know what to do. Go to the non-current assets, remove 240,000. Take this 240,000, add it on cash and cash equivalents. That adjustment sorted. A debit balance of 17,950 from the debtors ledger must be transferred while we're working with this. A debtors ledger and a debit balance is a plus. And how do you cancel a plus? By subtracting both sides. So you go to trade and other receivables minus 17,950. Sorry for the space there. And you also subtract the same amount here, minus 17,950. That transaction sorted. The following financial indicators were calculated on 20th February after the adjustment. Okay, current ratio means current assets as to current liabilities. Looking at my answer book, I have the figure for current assets, 2,080,000. So current assets, 2,080,000 as to X. That will give me 1,6 as to 1. So if we do the maths here, simple proportion, the end result, it is that this 2,080,000 is divided by 1.6. So you come here, this 2,080,000 multiplied by, not multiplied by, sorry, divided by 1.6. We'll get our answer to be 1,300,000. That is our first ratio. The second one is debt per equity ratio, as the name suggests. So here is non-current liabilities as to shareholders' equity. We don't have here on non-current liabilities, X is equals to shareholders' equity section is given, and the total amount is 9,150,000. Check in your answer. Now 0.4 is our final answer as to 1. If you want to get X, it means you take this and this to multiply each other. So now I'm on the loan. I'll take 9,150,000 multiplied by 0.4. That will give me 3,660,000. Right, so loan sorted because of the ratio. So we can tick away these indicators. We're left with one adjustment, and this presentation is done, and we can also do the totals. The loan from XY loans will be reduced by capital portion of 228,000. This is what we call short-term loan, and that will give us a current liability. Short-term loan, the amount is 228,000. So, well, we've extracted every possible figure. We have treated each and every adjustment to the best of our knowledge. So from here, we must then go and do the totals. So I already have my A here according to our format. Also have B here. I have C, which means I can get total equity and liabilities because it is A plus B plus C. Total for trade and other payables, if you put those three in the calculator, you'll get 647,500. If you look at shareholders for dividends, that will be 213,400. Now you take the total amount of 1.3 million, subtract 1, 2, your balancing figure is going to be 211,100. As for A plus B plus C to get total equity and liability, it is 14,110,000. That will be our total equity and liabilities. Don't forget to do the golden thing. Post your wrong answer all the way to your assets. So you put 14 million here, 110,100. Since we already have one total, because here we can say this is A1, this is A2. And in this case, we post from the bottom, A1 plus A2 should always give us this amount. So we can take this, subtract A2, that will give us an amount here of 12,030,000. Fixed deposit, this amount minus this 240, you'll end up with 249,000. Therefore, we can calculate the balancing figure for fixed assets. 12,030,000 minus 249,000 will get 11,781,000. It is 11,781,000. All right. Non-current asset section sorted. Now you must calculate the value for trade and other receivables. Remember these figures that I've placed this side because of space. If you put everything together, our amount is going to be 868,400. The total amount for cash and cash equivalents, 245,000. To get the balancing figure, which we have said inventory is balancing, take this total here, subtract 1, 2, and that will give us a balancing figure of 966,600. And there we go. We have completed the balance sheet and we have collected all the 28 marks. So the most important thing here is to understand that this was a standalone question of a balance sheet. And there is no income statement adjustments where you would be posting your wrong answers. Here from the word go, you are supposed to do the calculations and show your adjustments in brackets to try and get all the answers. This is the end of my presentation. Thank you. Thanks for learning with me here at Accounting Made Simple. If this video helped you, go ahead and like, subscribe, and share it with someone who needs it. New lessons drop each and every week, so stay sharp and stay consistent. If you got a question or need help with a topic, drop it in the comment section and I might feature it in my next video.